activities at the fixed income market were quiet as investors set eyes on Wednesday's primary market auction, where 121 billion naira will be maturing. The traders at GT Bank say they expect bullish sentiments ahead of the incoming liquidity in the form of coupon and FAC payments. Chioma Udu, FX dealer at GT Bank, joins me to discuss activities at the markets. Chioma, thank you so much for joining us today. Let's get right to it. Bring us up to speed on market action today, and of course, all eyes on that CBN PMA scheduled for Wednesday.
Hello, thank you for having me. We expect our rates to trend up. The market has been very bearish in this administration. Investors are now seeking for high-yielding assets, as inflation is currently at 15.92 from 15.7, a 22 basis points uptick. This gives a negative return to investors. And then we don't have a lot of liquidity in the market. Liquidity has been thin. We've got coupon payments of around 122 billion today. That's basically the liquidity we have in the market. So we expect that we're going to see investors at the auction tomorrow try and get the best of it, and we expect it to trend up.
But are you able to give us some kind of a range, how high rates could go, exactly what investors' expectations are in terms of how high yields are going to be, and of course subscription rates?
Well, at the last auction, the 1 year closed at 4.6 from 4.45. We expect like maybe a 20 basis points uptick. This gradual increase in rate this increase in rate is going to be gradual rather, and we because of the liquidity we don't have in the system, and then if you look at the bond auction, we also saw an uptick in rates in that space. So we expect that generally there's going to be an uptick in rates across channels, especially in the 1 year.
And I'm just wondering, because I know this happens from time to time at the market, but what could be different with this cycle? Could we see a sustained gradual rise in rates, especially, of course, investors trying to push as much as they can for higher yielding assets?
Yes, like you said, sustained gradual rise in rates. That's what we're going to see. It might be slow, but it's going to continue to rise. Like I said, inflation is at 15.92, and then 1 year is at about 4%. Well, that's a negative return for anybody that is invested in these assets. Investors are looking for higher yielding assets. If you come to the market today, we notice that most trades were at the short end of the curve. The bullish trend we have in the market is at the short end of the curve because of this expectation of increasing rates at the auction.
Well, what about the longer end of the curve? I know that recently there were 1 or 2 reopenings, and of course, rates investors, also looking to higher rates at that end of the curve. What can you tell us?
Well, at the bond auction, that's what I'm speaking to. At the long end of the curve, we saw a new 10-year, that's 2032. It closed at 12.5. Then the 2042 closed at 12.90 from 12.7. That's a 20 basis increase. And then the 10-year, that's the 2025, closed at 10% from 9.5. From this, we continue to see that interest rates will likely trend up at the auction tomorrow.
And now the federal government has said that it believes that the local domestic market is vibrant and deep enough, to accommodate the significant increase in borrowings that we're going to see as the month to roll by. What does this mean for rates in the medium to long term as we see increased borrowing?
Well, the federal government is willing to borrow more than they have to pay. So, yes, the market is deep enough. There's a lot of liquidity in the system. People are looking to, invest in Nigerian assets. They could be able to get as much as they want, but they should also be ready to, pay higher yielding rates than what we have now.
Well, I hear you, but you also keep in mind that, there are very limited investment options in the market. Institutional investors, we know this has been the trend, for a while now, and that has been some kind of an advantage or upper hand that the government has had, over the market for a while. How is that going to change?
Well, that is different. There are other investment options. We have commercial papers. We've seen blue chip institutions close to papers. We've also seen government in other ways, savings bonds. And then the government is large enough to take as much liquidity we have in the system. So investors are getting wider. They're looking at higher yielding assets. Inflation, if you don't forget, is at 15.92. Simple. It's a negative return if they keep paying us at this low rate. So what I see is that we see investors trending towards the longer tenor assets. Like I said, the 2042 is closer, is at 12.90. So we see a lot of interest there. But for short-term borrowing, we're going to see interest, especially from non-competitive bids. But the general bias in the market is that government have to pay more to get more.